You got to make me co-host, Rico.
There you go, sir.
Welcome everybody to both sides of the conversation to our educational Thursday. Tonight we have an amazing presentation that's going to be presented to the community. We have a sister here that's going to talk about insurance, one of the most important things in our community that we need to be talking about. How do we protect our families with insurance due to COVID, violence in the community, different things, and why is it important to have insurance? I think this is going to be an amazing presentation. I'm John Henry, co-founder of Both Sides of the Conversation. I have with me.
Rico Hamilton, co-founder of Both Sides of the Conversation.
Yeah, and tonight we are going to get started. We're going to introduce our sister, but before we get started, just want to let everybody know tonight, this is our last Educational Thursday presentation for the year. We will reconvene in January on the 6th. We'll be having a attorney coming on to do a presentation about taxes as we get ready for the tax year. Due to the holiday season, the last two Thursdays of the year for Christmas and New Year falls on a Thursday. So we're going to respect the people, give them a break from all of this what's going on. But in the meantime, what we would like you to do is go back to our YouTube page, watch some of the previous Educational Thursdays. Also in our group, we will replay on those Thursdays some old videos that we did, some other presentations, and maybe you just joining us. We want to get you caught up and make sure you know what's going on here at Both Sides of Conversations with our Educational Thursdays. We will continue to have our final two Hidden Gem series coming up for December 22nd and the 29th. We will have our Sunday conversations. We got some powerful ones coming up. This Sunday, we will have our Black mom experience, our Black mothers, brown mothers of the community. We'll be talking about their experience of raising children, some single, some co-parenting, some married. I think it's going to be a powerful, impactful conversation. And all the brothers, the men in the community, we had the Black dad experience a couple of weeks ago. We need you guys to come tune in, listen to the sisters, hear what they talking about. And then the final Sunday of the year after Christmas, we will have the mom and dad experience where we will bring the mothers and the dads together, have some dialogue, have some conversations. We heard from both sides, and then we'll try to come together with a healing process, some solutions, some tools maybe we can use in our families and the community to help better our community. So with that being said, I'm going to go ahead and bring in our guest tonight, Shemira Fermon. She is a sister that is doing some amazing things. She started her career off as a veterinarian nurse, decided she needed a shift, a change. She's a Bay Area native from Oakland. She decided to get into an insurance business and financial insurance. And she wanted to help impact the community. She's a single mom. She has children, doing amazing things, didn't give up, but she saw the way that people were being taken advantage or the information wasn't being properly presented to our community when it comes to life insurance. And we know in our community, people don't believe in it. We've heard the grim stories of I had life insurance, my loved one died and the coverage wasn't there, or I've been paying all of this money and the policy wasn't legit. And she's here tonight to give us some great information to make sure that we protect ourselves, protect our families, and make sure we have the right coverage so that we can continue to leave generational wealth to our families. And I know at the end, me and Rico will have some conversations because this is a big thing in our community. We are tired of the GoFundMes. We are tired of the food drives. We are tired of the car washes, trying to bury our loved ones and trying to figure out how we're going to pay for services. We want to be intentional tonight. We want to give you the information so that you could properly protect your family. So in the time of loss, we don't have to stress and worry. We can make sure they cover. So with that being said, I'm going to turn it over to the presenter of the night, and she'll go ahead and introduce the rest of her amazing things she's doing and jump into the presentation. Go ahead, Shemira.
Hi, everybody. Thank you for having me. And everything that John said is absolutely true. I'm going to pull up my slides so that you guys, so you can start seeing it, because I have a whole one just dedicated to who I am. So we'll just go ahead and get that started now. But yeah, the biggest thing is seeing that in your community every single day and wondering, what could you do? What can be done? Who do you talk to? And finally just saying, you know what, let that be me. Why can't it be me? It doesn't have to be anybody else. At some point, we got to save our own communities, right? So let me pull up my slides for you guys and go ahead and get this started. So hopefully you guys can see that. Good, yep. Perfect. So you're gonna see me looking down. It's easier. Sometimes my laptop makes a clicky sound, so I try and control my PowerPoint from my watch so it doesn't make any noises in anybody's ears. So just go with that. But yeah, a little bit about me. I was a veterinary nurse for almost 20 years. I literally started when I was 18. My son was 3 months old at the time. I used to want to go to be a veterinarian, got in the field and realized that was not what I wanted to do. But I enjoyed being a nurse in that field. And I did it for a really long time. The hurtful thing that happens in that field is people don't have money. I mean, 20 years, my highest bill that I've seen was over $70,000. They paid it too with cash, by the way, but not everybody has that. Some people can't even afford the 120 and having to put people for an office visit when you work in an emergency. And I would have to put people in, credit card debt so that they could apply for all these loans to pay for, coverage. And it was like, okay, something's got to give. So what do we do? And then being in that field yourself and not having, as a single mom, even with discounts, being in the same boat as them, just let one emergency happen with your own animal and you were screwed. So it was like, okay, you have all of these things, but what do we do to help out? So I got introduced into financial services, being a client to someone helping me out, and then realized, oh my gosh, there's this need in life insurance in our community because we've all been there. Unfortunately, in my family, we've had countless kids die, and there's always a plate being passed around, a cup put at somebody's job to help, pay for that funeral service. And I gotta say, with all of my personal experience, the things that come after the funeral for your child being buried is what most people aren't expecting, and that's where you need money the most, because most people are going back to work, so you can't grieve because the bills need to be paid, and you don't have any money to take off work because you just threw everything at this funeral. And that's just burying your kid, let alone, older people and all these things in the middle. So I had this opportunity to get licensed and start educating people. And I just took my time and I learned everything, not just about the product that we serve. I wanted to know what these contracts about. I don't care where it came from, what type of policy it was. I needed to be able to explain it because even though it was English, it's still a foreign language. When you see all of these words, most people would just go, I don't know what this means, but I got it, and shove it in a drawer somewhere. So I wanted to be a part of making sure people understood what they had. You being able to make better decisions for what they felt they needed, whether it was the right coverage, the right coverage amount, making sure that everyone in their family was covered, because a lot of times you would get people that would put money just on the breadwinner, not realizing, okay, well, this person may not bring home an income, but they're sure going to take from your income if something happens because they do a lot. So just making sure that I was being a part of my community, making sure that people had as many of the answers as they possibly could. So I do that a lot, and that's something that I'm really passionate about, obviously. So I just want to start off with, I like to say, the elephant in the room, and this is something that we're seeing especially now, but I really do speak to a lot of Black and brown families because they are definitely underserved. And I say they, but we are underserved. You see it in all sorts of areas, not just financially, but, we're dealing with, COVID right now and not having the medical coverage or not being able to, have someone take care of your kids while you're still going to work. So there's all these moving parts that make us underserved, right? We also are the first generation to make less than our parents. And that was before COVID and all the shelter in place and everything. So now look at what we're going through. And even though what we're facing is different from our parents, or what makes it different from our parents is that we're going through it with less money than they had. And don't take it for a dollar sign. So what I mean by that is our parents were making an income that may not have been the best income, but they also didn't have to make 3.5 times their rent to move into a place, right? So their rents were a little bit lower. The cost of milk and gas were a lot cheaper. So they were still underserved, but they did it with more money because cost of living was just very different then. As we progressed, there used to be a time where one person can work in the household. Then it became 2 people working in the household. Now we're to a point where multiple people you're living in multi-level or generational houses. And in that household, everyone is working, and a lot of times everyone's working 2 to 3 jobs at a time. So if that helps bring a little bit more context to what I mean about people are underserved and they had more money back then versus now, if that helps. So some not so fun facts that we are seeing right now. We are passing away a lot faster at a greater numbers with this pandemic right now. And it's just not even just passing away, but even getting sick, having access to, healthcare just to make sure that we can get things taken care of, even to be at home or to be safe and make sure that we don't pass away. We have a lot of people not even just thinking about COVID, but in general, most people don't go to the hospital because they don't want the bill. And by the time they go to the bill, it's so expensive that it puts them in a crazy amount of debt and, just adding passing away on top of that. So we are at greater numbers. The pandemic just literally exploded what we already were struggling with. And then, of course, we have less access to financial advisors. A lot of banks now are shutting down those if they haven't shut them down already. There's a couple of little like credit unions and things that still try and do some financial advising, but it's very limited. Not only are you limited in where you can go, but you're limited to how much access you have. Certain places will allow you to come in, but you can come in and they say, here's our web platform, use it. We're not going to advise you on it. Okay, now you got to have a certain amount of money. We'll advise you, but only once. And then after that, so you typically got to have 6 figures to get a financial advisor to literally sit down with you and plan everything, whether it's getting out of debt, whether it's investments, life insurance, any of that, because a lot of banks now don't offer those. So where are people going for this type of stuff? And think about affluent neighborhoods versus ours. So I grew up in Oakland, but I worked in Dublin, passed through Black Hawk and Danville, all of those places, and it always looked very different from my neighborhood. So I'm from East Oakland when East 14th was called just that, East 14th. I lived on 104th for 25 years of my life, and in walking distance, I had 2 liquor stores, a pawn shop, a convenience store, and countless fast food restaurants before, I wouldn't even call them restaurants, but fast food joints before I even got to school. And then I had the trap house down the street, and I used to have to pass by the dope boys to get to school. They all knew my clothes size because they knew how to, hey, I got food stamps. We'll trade food stamps for clothes or whatever it is that we need to do. So that's what our neighborhoods look like typically. But when you're driving through Danville or Black Hawk or any other affluent neighborhood, what are you seeing there? You're not seeing liquor stores there. You're seeing beautiful libraries. You're seeing all of those different, whether they're big investment companies or small mom and pop investment companies. You're seeing community buildings that are beautiful, that waterfalls and everything, because why? People make really good income, so they bring in all their dollars plus their taxes to these communities and they get to flourish. What are they leaving behind? They're leaving behind stocks and legacy plans. They're leaving behind financial advisors. And what do we leave behind? Heartbreak and debt. So we're going to be talking about just some different solutions that you guys can use and different plans that you can do to make that change. Because if we don't start doing something about that, then who, right? So, like I said, what are we handed down? A lot of times we're handed down just nothing at all but worries and trouble. And sometimes are passed down information that just needs a little bit of an update. So back then, it says what was popular back then. I remember when I was younger, we had the meat man that came through our neighborhood. But when you think about my mom's generation, my grandmother, my great grandmother's generation, was the meat man and the insurance man. So pretty much everyone had the same type of policies because it was the same person that was in the same neighborhoods going from one house to another. And once they got you your services in place, they were literally coming back every single month to collect the payment. Why I say it needs a little bit of an update is because when you think about some of the things that are typically passed down, they're policies like whole life policies. Who own them? Usually your grandparents. I'm sitting with even still, you know, and I've been licensed for almost as long as I was a veterinary nurse too. What you're seeing passed down are those same policies that are owned by, oh my, you know, my mom has a policy on me or my grandma had a policy on me when I was a kid. I just want one on my child. You know, that's what I do get a lot of when I do hear someone that says that they have life insurance. And when you're passing down those type of policies, you're usually getting them very outdated too. So you're passing down $10,000 policy from one generation to another. And the great thing about that is at least they're passing down something. The not so fun thing about that is, again, it's a little outdated. The cost of living has gone up since then. So let me get to the next one. I like to tell stories so that it makes the points that I'm talking about kind of come to life. So this lovely house sits on Center Street in West Oakland, and one of my goals is to buy it back. This is actually our family home. My great-grandparents owned this home. They actually bought it for $4,000 in 1931. So think about that now. That can get you a used car. And if you're in the right market and you want to be in maybe Indianapolis or some Midwest town, that may still buy you a house. If you're living in the Bay Area, that's not even a down payment. And it took her over 40 years to pay it off. By 1971, she was the sole owner of that. Her and my great-grandfather went their separate ways. So think about that. That's a Black woman in the 70s being able to have a house, which is very impressive, but trying to do any refinances on that, none of that was going to happen. She couldn't even get to a bank in the 60s to even do that, let alone in the 70s and know what to do. So I'm going to tell this story two ways. I'm going to tell you how it played out factually for our family, and I want to also reimagine it to if it didn't play out this way for our family so you can understand the point that I'm going to make. So our family sold this house in 2000 for $109,000. Sad face. It sold again in 2007 for $579,000, and it is currently worth over $960,000. So I tell that because, first of all, I want people to understand generational wealth happens in a lot of different ways. And one way is ownership of real estate. Do not sell stuff, but we sell it because we see the cash on top, or especially when you're talking about Black and brown families, there's so much miscommunication and squabbling over something so small we don't see the bigger picture. So think about what that would have done for our family now. Sitting on a property that's now 4 bedrooms. It wasn't that size when I was younger, but just thinking about that now, you know, we have a lot of family that fall on their face, you know, and it's just life, and they need some stability to just help them get back on their feet. That could have been that family house. So I always tell people, you know, make sure that you understand the long game, because a lot of time we're so caught up in today and making sure the bills are paid today that we don't think about the long run. So I want to tell this story reimagined so that you understand why life insurance and making sure that the information being updated is so important. So imagine keeping this house. And I know a lot of people are pass down the idea of if you own a home, that can constantly be your cash cow. So I'm gonna play this as a typical, the way people typically play their house. So instead of us selling the house, just imagine that this property is growing in value. But what do most people do with their home? They refinance it, right? So imagine instead of selling it, it got refinanced, which, fun fact, it actually did get refinanced shortly after that for about $400,000. But imagine just doing that. So we refinance it for $500,000, and then we refinance it again for $900,000 or maybe $800,000. So imagine having that older policy Because at the time in 1931, having a $10,000 policy is a big deal, because if something were to happen, yeah, your house is 4,000. That leaves you a little bit of something to have final expenses, cover anything that may have been left over in the house. Because back then, I mean, even in the 70s, my great grandma was making not even $100 a month. So that's a big deal then. But if you're refinancing a house for 500,000, 300,000, or whatever, what is that going to do at that point for your family, right? So I want to talk about, and I always do that because I've heard to tell them the story, because I was always told never make a point without a story and never have a story without a point, because I really need people to see, if I can put that house into perspective with you now, it makes you understand, oh yeah, that's not that much. But when you think about it, you know, then 10,000 would have been a big deal then, right? So what are the different types of policies? They typically fall into two categories. I was going to say two, but that's four. Two categories. So your term policy and your cash value policy. Term policies, you typically get either on your own, but a lot of times when people have work or policies through work, so those group policies that you get, those are term policies too. And then cash value policies could be anything from your whole life policies. It could be your universal life policies. It could be, well, let's just keep it that way. It's simple, because universal life has a couple different ones in between there too. But just think about it that way. You either have a cash value that you can borrow from or you don't. What does that mean? And back up a little bit. The universal life policies are actually a hybrid between the two, and I'll explain that on the next slide. But it basically means you have a policy, like a term policy, that you can use and rent, basically, and then you have more permanent policies. And how they break down is where you start to kind of figure out what is right for me. So pros and cons, what I didn't take into account is switching this over. So I'm very sorry, guys. On my Google Slides, it's broken down a little differently, but I'll explain what you're seeing. So the pros of a whole life policy, you have, what people like the most about them is that the payment stays the same for forever, but it also has the same coverage for forever. So you never have to worry about that part. The other part is, like I said, the coverage, it stays until 100 or forever. I've seen some whole life policies go to 121. So that's the good thing. You have that permanent part and you can borrow from it. So a lot of people like that. They like having the option of, hey, just in case I need some money, what do we do, right? The con, the downside to it is it can be very expensive depending on how much you get, and it's usually your larger amounts. Again, I've had my license for well over 10 years. The largest whole life policy I've ever seen was 15,000. I've never, or 50,000, excuse me, 50. I've never seen anything bigger than that because it's typically too expensive to do, which is why you see a lot of 10s and 20s. You'll see that, especially now, you're seeing a lot of those even more. They're kind of reflourishing again. So the other part to that that people don't like so much is typically when you pass away, you get the cash value or the death benefit, whichever is most, but you never get both. And it sounds really messed up, because it is, and that's just how those policies are written. So you hope that you build up a lot in one of the buckets to make sure that it balances out. The other policies that you can get are term policies. The pros of that is you get a lot of coverage for super cheap, and people like that a lot. The other part to that is people like it because in other policies, when you have a family plan, so mom, dad, or mom, whatever the structure is, kids, usually they're set up in different policies. And with term policies, you can typically have everyone under one umbrella, so you're paying one price for one cost, one service. So people typically like that. The cons is, yes, it can be extended, but in the end, it does end. So people don't typically like that too much, and they don't like that there's no cash value for them to borrow from. And then you have the last one, which is a hybrid of all of them, basically. So those are your universal life policies. So why I say that they're a hybrid, well, let me back up a little bit. You can get more coverage than a whole life policy. So that's the good thing about it. Also, it does have cash value attached to it, so that's why people like that too. And why I say it's like a hybrid of both is not only can you borrow from it, but it's an annual renewable term. So it is a term policy. It does go, it is scheduled to go for a longer amount of time. So just like a whole life policy, 100 to 120 years. But what I mean by annual renewable term is every single year, even though you're paying the same amount. So with any life insurance, your cost of insurance goes up, right? But with a term policy, you lock in that price. So you're paying for that term, even though the cost of insurance goes up, it doesn't matter. They say, lucky you, you just locked in the price. So it's never going to change until you get to the end. With a universal life policy, it does go up. They just take the additional costs on the back end. And how that works is where people is kind of why people don't like it so much. So it can be expensive because as your cost of insurance gets older or gets higher, then you're at some point that policy is going to come due for you to pay for it. The other part to that is typically when you pass away, just like the whole life policy, you don't get the cash value, you get more, whichever is more. So if the cash value is more, you'll get that one. If the death benefit's higher, you get that one too. The other part to that is, here's where I say it comes on the back end. So if you borrow from it, or if there's more, or if it's poor market performance with that policy, because those policies are market-like, it can terminate your policy sooner than expected. Or if you have it for a long time and your cost of insurance is going up, it's going to take from, if you're not paying for that cost of insurance going up, it's going to take from that cash value. So people don't like the fact that it can terminate sooner than expected. And when it expires, sometimes it'll tell you that in the contract. Sometimes they'll give you, depending on if you borrow from it or something like that, they'll give you like letters in the mail to let you know, hey, it's coming due. So you always got to be on the lookout for that. So it sounds pretty tricky because you're like, oh my gosh, I don't like this. Everything seems like it's going to be an issue, right? So what do you do? So that's where we come in with what we call legacy plans. So what does that look like? So when you think about life, you're all through different stages. So I'm going to tell this from one stage, hoping that as I tell the story and as it progresses, you guys can understand how legacy plans can work from any stage in life. So the way we work legacy plans, and let me start with this, we treat it like, for us, we treat it like a casino. And when you go to Vegas, you're always known for the house is going to win. Like the odds are just with them because that's how casinos make money. Well, we like to do legacy plans with term insurance. And when you do it that way, the house will not win. So it's the one time that you can actually pay for money and get it in a way that you're paying for the money, but you're going to come out on the winning side. So I'm going to talk to you about how that works. So I know we talked about rent when I mentioned a term policy, how you can rent that policy, right? So we're all in different stages, but I'm going to talk about one particular family, and I'm using the 1 million mark for each of them, mostly because we're not taught or told on a regular basis that we can be a millionaire. Yes, you can do this with smaller amounts, and we love to do that with smaller amounts, but I'm not going to tell you about a smaller amount. Why? I'm going to tell you about the options that you have to make your family a millionaire and what that looks like, because we believe in looking at where you're at now, but also making sure you have options for that long-term vision. So this is just a family that has a kid. So we did, if we were to do 1.5 million on each of them, right? And we do it in term policy and in term insurance, it's going to make it a lot cheaper. And I know $514 doesn't seem cheap. I get that. But for the moment that when you're looking at other types of insurance, you would not be getting 1.5 million for 514 bucks. I promise you it'd be a lot more than that. So that's why we like to do it with term, because you can get so much for so little. And there's all these other moving parts that you can do with buying term and investing the difference and all of that fun stuff. But I just want to focus on just how you can create a legacy or generational wealth with just a life insurance for now, just to not confuse anyone, just to keep it pretty simple. So you have 1.5 million on each of them. So that's 514 bucks a month for the next 35 years. So that means doesn't matter what happens, if they become unhealthy, if they become disabled, doesn't matter. That's going to be the price. And actually, we always teach people to make sure that you have what's called a waiver of premium if possible, because if you become permanently disabled, what that means is you waive your premiums goodbye. So you keep that, and now the insurance companies are responsible for paying that cost. And most people don't even realize that that's an option. And disability can look like a lot of things. There's temporary disability. I mean, I got pulled off of work for a year for stress. That still counts. So there's all these little things that most people don't even know that they can do within their life insurance policy. So like I said, 1.5 million on each of them for 514 bucks for the next 35 years. So what does that look like? That's $6,200 a year. And when you think about it, over the next 35 years, when people are like, that's a lot, but you're only spending $217,000 over the course of the 35 years to get 3 million. Where can you do that anywhere else? Most people are going to put money into investments, they're going to put money into cars, they're going to do all of that anyway. Why not put it into a life insurance policy that's going to pay you way more in the end? So that's why we talk about looking at the long picture. So unfortunately, the downside to life insurance is it only pays out when somebody dies. So we've all had people pass away, especially with COVID. A lot of us have had family members affected by that. We can't ever, and we talk about life insurance as income protection. I'm only saying life insurance for the purpose of this webinar. But in my regular life, I don't even call it life insurance. I call it income protection because I can't protect your life. But what I can do is make sure while you're emotionally devastated, you're not financially devastated. So eventually, those two parents pass away. What does that mean for the kid? So unlike with any other company, you're with us, you're not going to just be passing your kid a check. You're going to be passing your kid a financial advisor. And what are we going to be doing? And here's why it's very important why I say financial advisor. You want to be sitting with someone. If they're not investments licensed, they better be connected to someone that's investment licensed in their brokerage firm, in their office. Because just being a life insurance person is not going to help once these checks get cut. Because if they don't, how many of us have seen people blow through money? I mean, even with the lottery, people will win in the lottery and then the money's gone a year later. We will not do that with our families at all. We are investments licensed too. So whether you're dealing with me or one of my teammates, if they're not investments licensed, we will make sure that they get sent when we're dealing with them, they get sent over to the investment specialist immediately after. Why? This is why it's important. So we just take that 1.5 and put it into measly accounts, or the 3 million, excuse me, and put it into a measly account that's going to pay them 5%, just the interest. We're not talking about the principal. We're going to leave that alone and then continue to let that grow. But we just take out the 5%. That's $150,000 for that kid a year, whether they are working, whether they're doing something or not. But that's just free money that's going to be coming out from that one insurance policy. What does that do? Now imagine that they're already, older, probably have a family on for themselves. What we're going to do is have them increase their own personal policy. And what we're going to have them increase it to, excuse me, all of a sudden my presentation froze. There we go. We're going to have them increase it to 6 million for that family. Does that make the cost go up? Absolutely. But who cares? Because if it's $2,900 a month, what that means is $34,800 a year, but they're not paying it. We're going to have that policy from their parents, that interest, pay it for them. So they still have $115,000 a year to do anything that they want to without touching the principal. So when we talk about the house, in this scenario winning, the house is already lost twice. because they paid 200, the parents paid 217 and they got 3 million. And now we're using this cash to pay for their kids' policy. So the parents are still taking care of their kids, even in death, right? So now you have those parents pass away. So now we're on to the grandchild, right? So now the grandchild just received $6 million. We do the same exact thing. We invest that for the grandchild and just let them live off of the interest alone, nothing else. So that's $300,000 a year. What do? Same thing, but instead of doing the 6 million, we're gonna go ahead and increase it to a little bit more. Why does this keep freezing? I'm sorry, guys. So we're gonna increase it to 20 million. That's $4,800 every single month. So that breaks down to about 58,000 a year. But again, they're not paying for it. We're gonna make sure that the parents already from the original parents, we're using that money still. All it's doing is compounding even more. So now they're spending 58,000 a year. They still got 242,000 to just sit on. Not counting the other that is growing, the principal that's growing. This is just talking about the 5%. So what's really important about this, and I always tell people, when we're doing these policies, you have to talk to people and be honest. The biggest thing that I run into is trying to stress the importance of your life insurance cannot cancel. Your cable can, you're going out to eat can, but this can't cancel, because the only way this works is because, see, what makes this beautiful is you can cancel the insurance, but as long as you're paying your premiums, they can't cancel you. So that means if you hit rough times, nothing gets taken care of first past this. Because imagine what this is doing for your family a couple generations down. Again, that's only 2 generations, and we're at 20 million. Not counting all the principal growth that was doing its thing in the markets, whatever it was, up, down, whatever, that's not included in this. We're just talking about the policies itself. Imagine if we just kept doing that a couple different generations and generations and generations. And we see people all the time. I had friends of mine, and it's interesting because her family, the ownership that they had, she was upset that she had to pay $10,000 to rent a house. That was her down payment in the city. So she had to drop a $10,000 deposit, but she had an inheritance, and she was upset that she had to pull it from her inheritance. One of the doctors that I just recently met is from Australia. Her parents had a mom and pop shop, and her dad took that and exploded that store into something so big. And when he sold it, they don't have to worry about anything. I mean, she grew up taking trips with her mom, having, girls trips with her mom every single year. And it was pick which country to go to. So that's normal for other people because they're passing down, money and information and financial advisors and all of these things. That's possible for us too. So I always try and make sure we understand why that's important. Most people, if you ask them who their great-great-grandparents are, they'd have to think about that. And some of them don't even know. I know one great-grandparent off the top of my head. That's because of her immigration story from Ireland here. And that was the mother to my great-grandmother that owned that home. But don't ask me about who she married. I don't know his name. And the reason why is because they didn't have anything to pass down. We hear families that have legacies attached to them. Rockefellers, you have now the Zuckerbergs, that he has his kids and now he's such a big name. You have the DuPonts and all of these other people that have legacy that's attached to their names because they pass down something each time. We don't have that because what are we passing down other than debt and sorrow? So I always tell people, make sure that you take the time to get the information. Sometimes I'm sitting with people just to explain policies that they have. And the one thing that they get so frustrated with, and if anybody has a policy right now that has one of those clauses where it may cancel on you, or you may have borrowed from it and you don't know where you stand, don't get frustrated. I sit with people a lot and I have to explain to them, you did the best you could with the information that you were given. Unfortunately, these policies aren't going away anytime soon. They tend to just kind of hide a little bit and then repurpose or re-flourish out of nowhere. Universal life policies came out a lot recently after the recession, because a lot of people had lost a lot of money in the recession and they wanted market like. They didn't want something that was directly in the market because they seen their money go to half in a day. So they wanted something market like. And what I mean by market like is these policies will have someone in it, or someone that basically, imagine someone saying, I don't want to work into the market, I'm too afraid, so I want to pay you the money and then you figure it out. So what they do is they invest into the market and then they give you anywhere from 2% to a 6%. And I've seen some go a little bit higher, but with the fees and things that are involved in those, it doesn't pan out to be that much. So I always say safe with 2 to 6%. So basically you're paying someone else to take the risk, but that costs you a lot in the end. So if you have any of these policies that you have questions on, I definitely want to make sure that I get that covered for you. My information is right here. I know people are really big into social media. So if you have a Twitter, my Twitter is Life of Shemira. My IG is The Life of Shemira. Twitter wouldn't let me keep the extra 3 letters, which is really a pain in the butt, but and that is my personal cell phone number. So if you guys have any questions, you can always send me a text or shoot me a phone call. With the holiday season and with COVID, we're getting a little bit busier because people are losing their jobs and they don't know what to do with their retirement accounts, or they only have life insurance through work or something like that. So we are getting a little busy, but you can definitely give me a call, whether it's me helping you directly or somebody that I trust really closely that's in the office. Because for me, I don't really care who helps you, if it's me directly or not. I would just want to make sure you get the help. So you can always reach out to me. If you guys have any questions, that was a great time to go over any of those that you may have. Hopefully that was helpful enough. I tried to keep it kind of simple for everyone, just because I know sometimes it can be a lot of information and I didn't want anyone to get frustrated and mentally shut down. So I wanted to give enough stories that you guys could keep up with it. So hopefully that was good enough for you guys.
No, I think you did an amazing job. That was a good presentation. The way you laid it out, I think it was amazing. We definitely going to replay the information. And there you go, folks. Another sister from the community, amazing information. You don't even have to worry about where do I go get the information from. You have somebody here, reach out to her, get set up on the right policy. You heard what she said. You know, me and Rico, we have our financial literacy that we're doing. We're teaching people go with the term policy. I told you guys, I got a $2 million policy, $99 a month. You can't beat it. You know, we got to have insurance. We got to protect our loved ones. Great information. Rico, I know you got some questions. We deal with this. I'm going to let you go ahead and get the questions.
Well, you know, it's both sides of the conversation.
What you got for me? I'm ready.
So I mean, it's really not, I mean, of course, it is a question. So I'm trying to figure out how do I frame it. So with the work I do, a lot of the work I do violence intervention and prevention and crisis response. So I respond to a lot of homicides that happen within San Francisco and within the city. And there are a lot of families that do not have any type of insurance. They don't have term, they don't have nothing. And we have a lot of GoFundMes. And then if there are children or mothers or family members that do have money, they're left in debt trying to figure everything out. How can we get those folks to buy into the concept of insurance? Like, I mean, I think like at this point, like it's a mindset now. Like how do we get folks to understand, even if you are getting just a small policy, it's better to have a policy than not have nothing. So what do you think are some ways that we can get the community to buy into that? Because I always thought that, you know, if folks is on any type of assistance, the assistance to, you know, add a little extra amount, $25 or something, and it automatically goes into a policy. That's just what I always thought. But what do you think are some ways that we can get them folks to buy in?
First of all, I just want to say thank you for what you do, because based on your work, that's got to be just really wearing on your energy, your mind, everything. So thank you for doing what you do because it's very important. I think honestly, the first part of getting people to buy into it is letting people know that there's places like us that are hiring more Black and brown people because we have trust issues. You know, you come in and you can't even. It's funny because I'm from Oakland. If you say International Boulevard, I look at you sideways, and that's just a city. So, and I'm like, where are you from? You're not from here. Stop it. Or, okay, how old are you? So we have to have people that work in these areas that look like us, that talk like us. And it's not even just, you know, hey, you speak Spanish. I need somebody that speaks Spanish. I just want to make sure that if, you know, you move a certain way. You understand, you're not afraid to come into my house in any neighborhood. And I know it's pre-pandemic, you know, it's the pandemic, but even pre-pandemic, if you too nervous to go into a neighborhood, you probably shouldn't be doing this work because the neighborhoods you're worried about are the ones that need us the most. And the neighborhoods that understand those people are the one those of us that come from it. So honestly, I think the first part is hiring more people in this field, more Black and brown people, as many as possible, and removing the barriers to make it easier for them to work in this field and to get licensed and to stay licensed. I get a lot of people that are like, I don't know if I can do this. I'm like, okay, well, your worst case scenario is you end up with licenses and a financial education. You're already above where you were before. And people are like, oh, I'm too young. I don't know if people will take me seriously. One of my clients is a family member that worked at a bank for 13 years. And when she became a client, that was the first time somebody ever talked to her about investments that she can understand it. She worked at a bank, but her job was to know exactly what she did. So yeah, I think to remove those barriers is hiring more people that look like us, and making sure that we keep them in these positions as long as we possibly can.
Wow, that's deep. You know, we was on a call today, and that was one of the things that I didn't hear about, you know, what all of getting people back to work and opportunities for community is definitely in the financial industry. And I'm glad you said that. Next time I'm on a call, I got to remember to make sure that that's a part of the job curriculum or the avenues that we need to get people into that work. Very important. And now when you recommend getting a term policy, whole policy, how many times of the salary are you recommending? I usually typically tell people you want at least 12 times your gross income. If you make $100,000 a year, you should have at least a minimum of $1.2 million policy. What would you say in that effect to people out there listening?
So we actually look at insurance a lot differently than that. When I'm looking at insurance, I'm talking to the client themselves. So I'm asking questions like, not only how much do you make, but if you were to pass away, how much money every single month would you want to leave to the person? If you have little kids, that's taking care of your kids, or if you have a spouse, are we just replacing your income for the moment, or are we going to replace it for a certain amount of time? So, hey, you know, do you want to leave 2,000 for 15 years? Do you have debt? Because you may not have debt. Do you have own anything on your house? So we look at their individual needs. What is their target stuff? And yes, it may be one of those magic numbers. Back when I first got licensed, we did used to do that, but most people can't afford that target anyway. So we at least figure out what is it that you need for your family that you can focus on, and then what is your budget? Because one thing that I do fall into a lot is people will get these policies and again, they reach for the stars, but let's figure out where your budget is because you can always change your policy. You can always increase it. You can always step it up, step it down, whatever it is. So let's figure out what you need. What are your goals? If you were not to be here tomorrow, what sort of impact do you want to leave financially for your family? So we take it from we're not cookie cutter in that sense. We take it from a personalized approach, because what you need may be different than me. And it may be that original number one or two times, but sometimes it's not. And sometimes people really do want to pass down, you know, money to their kids. How much do you want to leave? So we try and look at it from a customized standpoint. But if you're looking at a target, I honestly say, I don't even want to look at that large number. How much can you put aside every single month without thinking about it?
Right.
That's what I'm looking at. What can you pay every single month and get used to paying every single month? And once we get that established, then we can work our way up from that. If we have nothing and you're saying, listen, I don't have nothing, but I want something, I'm broke, what's your budget? We'll work within that budget and then go from there.
Right. I think, yeah, that's very important that you said that. And, like Rico said, some of the people in the community, they are struggling. We teach that the financial steps, but definitely we trying to make people, and Rico saying, how do we get people to do it? Is put the life insurance in your budget. You could pay
Yes.
for cable. You could pay for cell phone bills. You could pay for McDonald's every day. You have to put the life insurance as an important thing in the budget. And I think that's one
Yeah.
thing that we're continually trying to push to get it in the budget. Even if you have to get a policy that's $50 a month, $60 a month,
Yep.
there's a
And we
way.
definitely do.
Have to have it. I mean, even at a $40 a month term policy, you might get a $500,000 policy or $250,000. Something that can
100%.
cover the cost of the funeral and leave something for the family at minimum. I think that's just what we have to do is promote that. Got to get in the budget.
Yeah.
It's one of the necessities
Absolutely.
in our community.
And we do no. And here's what's funny. Even as a mom, when I'm sitting with people, they'll give me a budget, but they're like, "Oh, I want some of it to go to kids' college, or I want to put this towards my retirement, or towards something like a trip or something." I'm like, mm-mm. We're gonna focus on the life insurance first, and then we focus on the investments afterwards. And then when we look at the investments, your kids come last on that plate, and that's hard for parents to receive that message. But your kid, as much as we hate student loans, your kids can get a student loan. They can totally get financial aid. They can get scholarships. They can get all of these things. But I'm not going to start with your investments first. I'm going to start with your life insurance first, because putting $50 into the investment, that's great. But if you die tomorrow, you only got $50 in there. So we're going to start with your life insurance first and then build on that. An emergency fund. Then we're going to talk about your shortfall account. Then we'll get to your retirement. And sometimes people don't even understand the levels of that. Why do we not start with a retirement account first? Because it'll cost you too much if I didn't do you an emergency account first. Because as soon as the tire blows or the refrigerator goes out, you're going to try and reach into that 401k or that annuity or something like that. No. So that's why we take everything in the steps. And for us, when we're building that financial house, your life insurance is the foundation that keeps everything together. Because if you don't have that and something happens to that breadwinner, you're gone. And most people don't realize when they talk, especially when I'm sitting with homeowners, when you ask them, what's your most valuable asset? They're telling me their house or their cars or their stocks. And I'm like, no, that's you. Because if you don't come home, all of those other things fall apart. So I got to make sure that I'm insuring you first, and then we work on everything else.
Oh, wow. That's deep. That's definitely very important. Um, that you said that. And then talking to the people who work in, I've run into a lot of people, like I know you said a little bit about it. They have insurance at their job. So once they work for a company, they think, hey, I have a life insurance. But can you really hone in on letting people know why it's important, even if your company offers you life insurance, to get your own policy outside? And then the reason why is because we know
Yeah.
when you lose your employment, all the benefits go, right?
Yeah.
And usually that happens after 10, 15 years. Now you
Yeah.
become older, different health conditions. Now it's harder for you to get insurance. So I try to encourage people, get the insurance now outside of your company. So if something happened with your company, you still covered it. You don't have to go through all of the medical clearances.
That's exactly right. So that's the exact reason why we tell people to make sure that they have their own life insurance outside of work, whether you leave the job or the job leaves you. Another thing too, especially if you're dealing with unionized jobs, every couple of years they negotiate. So they're trying to do the best that they can to get you the best services. So that means trading out your life insurance coverage, but you get better medical, they may do that. So you need to have it for just that reason. Lock in that price so that you're good. And if any health things arise, it doesn't matter because you're already covered. I can give you an example of that now. Actually, a good friend of mine and one of the regional vice presidents here in the office, he had his uncle worked for Cedar-Sinai Hospital. So he was like, oh, no, I'm good. But he let him know, like, we should get one just as a spare tire. Cars come with a spare tire. Your life insurance you should have a spare tire for your life insurance too. What happens? His uncle got cancer. His uncle ended up losing his job because he had been off for so long. So that $500,000 that he had for his job went away. So luckily he had the $300,000 with our company to still make sure that he has something left. But those kind of things happen, even with the best of intentions. You had JCPenney's last year, all their retirees lost their life insurance. I think it was last March because they decided to get rid of the program. because they were going under. So these are things that you got to think about. So you're exactly right. You should always have something outside of work that you can control.
Rico.
I think she hit everything on point. Hey, I was gonna say an OG saying that they used to say on what was that basketball game back in the day we used to play on Nintendo. The nail in the coffin.
Yeah.
No, definitely. I'm looking in the group for comments. Basically, all I'm seeing is people saying thank you. That was great information. I need to increase mine. I really don't see anybody asking any questions. And that's kind of what this is about. If you sell a
Yeah.
presentation good, you don't got a lot of questions. Typically, we find people asking a lot of questions if the presentation is a little sketchy or the information is not clear. Obviously, you did an amazing job. We're definitely going to replay it and replay it and replay it and get as many as our people in our group and following to reach out to you if they have any further questions or concerns.
Yeah.
I think,
and it doesn't matter what state they're in. I'm licensed in a couple different states, and then if there's a state that I'm not licensed in, it's just paperwork. So, and I'm always up for a conversation anyway. So you don't have to necessarily be my client if you just got a question. I do policy reviews all the time for free. So if you have a policy that maybe the agent has gone away, you don't know anything about where their whereabouts, or because people quit in this industry a lot. I've been very fortunate to be at the same company and maintain my license for well over 10 years. My mentor has been here for 20 years, actually 21. His mentor has been here since the 80s, so we are sticking around. So if you have any questions, we do this for free. We don't charge a service at all. You don't pay us out of pocket, not one dime, for us to sit there and just go through as many questions as long as it takes. Because for us, it's more important that you get the help, and we'll get paid eventually on the back end. We're not worried about it. Just doing the work is more important to us. So even if you have a question, don't hold back if you think that it's going to cost you a thing, because it won't.
Wow, deep. Yeah, definitely. Thank you, sister, for coming on. We're gonna have to collaborate.
Thank you for having me.
Stuff. We know a lot of community leaders. I know Lynn, Rico been asking us, they want to put some kind of thing on in the community as things open up. So I'll definitely be reaching out to you. I have some stuff, you have some stuff.
Yeah.
So keep powering through this and educating our community. That's what we got to
Yeah.
do intentionally. And that's our goal. That's our motto here at both sides of the conversation, is trying to intentionally educate our people. You can't lead the community if you don't feed the community with information, knowledge, and love. And that's what we're trying to do here. So Rico, before you close out, because I'm gonna let you close out, I can't talk too much tonight, but I gotta say this before we go. I want to say thank you to Cheryl Davis, the mayor, and to Shell over at College Prep. I know I'm kind of distracted. I'm on a Zoom with them, and they're right now educating our young people about Kwanzaa, teaching our young people history, education. So I'm on this call while I'm listening to this great sister, and Cheryl Davis them and to show them over at College Prep. They put together a Kwanzaa kit, to put the candles in. They got an educational information on here for the young people, teaching them all the days and what the different Kwanzaa meanings are. So, I just want to shout out and thank the mayor and Cheryl Davis and them for continuing to be intentional, educating our young people. We got some people in the community doing some amazing things. And just want to thank Cheryl Davis and people over at 100% College Prep, Diane, them. They on there right now, teaching the kids, engaging with them about Kwanzaa, teaching them different things, man. I just think that's amazing. And people are always saying that. It's things not happening. I just have to reiterate. It's things happening in our community. Our young people are being educated. The community are being educated. They were out there today just passing them out, food to the community, different things. So just wanted to say that before Rico close it out.
That was a whole lot. I wasn't gonna say a lot, but that was a whole lot.
Well, you gotta let the people know what we got coming up, Rico. Come on, close us out.
I'm just joking. So thank you everybody for watching both sides of the conversation. Educational Thursdays. We had an amazing presentation on insurance, and everyone out there, please watch this over and over and over. Learn how to budget. Learn how to make sure that you understand that your value is more important than a house, than a car, than any monetary things. You are the most important value that's valuable to you, right? So also don't forget Sunday chat. This Sunday we got some amazing mothers that's gonna come on and We got mothers who are married, mothers who are single. We got mothers who are co-parenting, and we're gonna have an amazing chat. That's Sunday at 2:00. Don't forget to watch both sides of the conversation. Sunday chat. That's us for today. That's it. We'll see you guys on Sunday. We know you all love us. We love you
Yes.
too.
And follow us on all our social media handles. You can follow us on YouTube. This video will be uploaded. You can see some of our previous Educational Thursdays. Definitely check us out on Facebook. Like our Facebook page. Like the YouTube video. Subscribe so you can keep up to what's going on. And we on Instagram, Facebook. We all over on both sides of the conversation. So thank you guys for tuning in.